Hi guys, welcome to another live trading session with Optionables. My name is Saket and it has been a while since we last caught up. So we have 4 trading days to be reviewed, that is Tuesday, Wednesday, Thursday as well as Friday. So in the community tab I had posted the Tuesday screenshot where we ended up making around 37,000. Wednesday was a relatively flat day, but we didn't make much. We just made around 7,000. Thursday again was a flat day for us. Even the market, it was more or less flat day. So we just lost around 15 to 20,000. And there's one more thing I have to tell. And if we are making any big loss, say around 1 lakh, 1.5 lakh, I will make sure that I will be posting it on the same day. Because mainly from the loss making trades, you get to learn what are your mistakes. And then finally Friday, it was one of the most choppy days I have seen in some time, that too after VIX fell below 20. And today we have a lot of adjustments. That's the reason we will be only focusing more on today's trade and we'll just brush up on the previous 3 days trades. And today, right after the market opened, we went to a loss of almost negative 1.5 lakh. Whole day we tried to recover that, and towards the end we ended up making somewhere around 70 to 80,000. So that was the entire day's trade today, and we will see what all adjustments we did. Again, we entered 3 short straddles, 9:30, 1 o'clock as well as 2 o'clock, and 9:30 short straddle went completely for a toss. We took the counter trade and then did lot of shifting. So if you are not aware of counter and shifting, please watch the adjustment video. The link is in the description below. And we will now quickly move on to the trade and see what exactly happened. And many people are asking for the Excel sheet where we maintain the P&L tally. I will also be attaching that in the description, so you can find the link in the description. And finally, if you are liking the content on this channel, you can follow us on other social media platforms as well. The link again is in the description below. Thank you so much for joining. Hi guys, welcome to another live trading session with Optionables, and it has been a while since we did our last trading video. It's been around 4 days. So we'll quickly update our P&L. So Wednesday and Thursday the market was quite flat and there was not many trades. So on Thursday we did some trades, but actually today what happened on Friday, we have lots to learn. So we'll be discussing more about what happened on Friday, whereas I am going to show you the recording of Wednesday, Thursday as well as Tuesday. So first we'll fill up the Excel sheet and see how much is left to achieve. So Tuesday we achieved 37,000 and we paid 7,000 as brokerage. And Wednesday we made 7,500 and we ended up paying 7,000 as brokerage. Thursday we had a loss of 25,000 and we will keep 12,500 as brokerage. And Friday we had a profit of 75,000 and we will keep 7,000 as brokerage. So I am sure that most of you would have already seen the screenshot of Tuesday's trade posted in the community tab, so I won't be showing that again. So coming to the Wednesday's trade, actually I don't have the last part of the recording. So what I will do is I will show you the contract note itself, so it is easier for us to understand. So this is the back office of First Stock. You can see Optionables FinTech. So here if I go to 16th contract note, that is Wednesday's contract note, you see the total obligation is 57,000. In that futures we made 50,000 profit, options there's a 7,500 rupees profit. So you can see the trade date here, 16/6/2021. Coming to Thursday the last part was extremely crucial. That's the reason I have opened and kept. If you remember the previous Thursday when we lost 2.5 lakh, we did one mistake. During the last hour we had 1.5 lakh profit. I took extra 1 lakh risk and I took one more trade, but that went completely bad and we lost 1 lakh, right? But today what happened was, as I told you in the last video, 8 out of 10 times that trade is going to help us recover everything. Only 2 times it is actually going to give us a loss. So yesterday was again one of those 8 out of 10 times where we had a loss of 1.5 lakh and during the last hour we recovered everything. So this is the Thursday's recording video. So you can see at this point I have 1.5 lakh loss and it's 3.6. So which means hardly 20 minutes left to expiry and I have 1.5 lakh loss. So I see the market coming up. So what I end up doing is I end up doing 15,700 short straddle. So this is what I end up adding, and I add around 20,000 quantity of 15,700 short straddle. So you can see here I have 21,000 quantity of 15,700 short straddle, and as the market recovers I end with a loss of only 20,000. So I square that off and I enter BankNifty 34,600 and I end with a loss of 20,000. So here it won't be showing you a loss of 20,000, 25,000 because the positions got squared off at 1525 and it won't get updated here because the broker himself squared off all the positions, and when broker squares off it won't update in the dealer's position book. So that's how we arrived at these three figures, and that is 37,000, 7,500 and 25,000. Now we are going to discuss more about today's trade where we get to learn a lot. So we'll be quickly moving on to kite chart. First we will see the trade and then we will watch the video. So today, to be honest, we took lot of trades because we had to do a lot of adjustments. So we took around 200 plus odd trades, but I'm going to try to explain how exactly and what exactly we did. So initially I started with right in the morning around 9:30, and you can see today the move is so wild that it is a complete V-shaped move. It started all the way up here, comes down and completely recovers. So that's something amazing. So today what we started is, initially we started with a 15,650 PE short. So this is a PE short. We shorted this at 75 rupees and we shorted a 15,800 calls at 75 rupees. So both were shorted at 75 and 75. So that is around 9:30, somewhere over here. And then I don't even have to tell what exactly happened. The market just started coming down. So as though there was no stop. So the market came till here and obviously it triggered the stop loss at 101. But the surprising thing is, you can see that PE moved from 75 to 101, whereas CE just moved from 75 to 60 rupees. So this is the difference. This moved from 75 to 101, whereas this just moved to 60 rupees, which means here I lost 25 rupees, here I just made 15 rupees, which means net loss of 10 rupees. Then what I did, I obviously take the adjustment trade. So which adjustment trade do you take when your stop loss gets triggered? So obviously the counter trade. So now I end up taking the counter trade. Where do I take the counter trade? At 15,350. So here is where I take the counter trade, at this level 15,350, and I have a 15,800 call short. So let me just write that down again on the top. So my stop loss has been triggered and now I have 15,800 call option open at 60 rupees and I have 15,350 put option open at 20 rupees. So around 22 rupees. So this is the new position I enter. I am already at a loss of somewhere close to 40k. So this is the new position I enter, and then what starts to happen is, again the market tends to recover, but there's a huge fall. And in this huge fall, this option, so this is where the IV comes into picture. So if the market falls gradually, then obviously the premiums will erode slowly and you won't go to a loss. But when there's a drastic fall, when there's a sudden fall, the premiums just spike up. Both puts and calls, both premiums go up and you go into a huge loss. So what ended up happening, this call option fell from 60 to 50, whereas this put option went from all the way 20 to 50, which means this only lost 10 rupees and this lost somewhere, this gained somewhere over 30 rupees, which means now I'm at a huge loss and my M2M just shoots up 1,20,000. So 1,20,000 to 1,40,000, around this range. So next what happens, I'll just clear this. So now I haven't given my CE, so I'm still holding on to my CE. So both are trading at 50 rupees and 50 rupees. So meanwhile, at around 10:15, I enter one more trade, that is 15,400, 15,800. So the first trade which I took, both had 3,000 quantity. So we'll note that down. So this trade which I took, new entry, so that had a quantity of around 1,500 at 50 rupees each. So now what happened again? So again the market fell, right? Which means obviously the put leg triggered the stop loss. So put leg triggered the stop loss, and this time I didn't take counter trade. Rather what I did, I shifted all my calls from 15,800 to 15,700. I hope you understood what is the actual position right now. So forget about the 3000 trade. So this is the new trade what I am talking about, which we entered somewhere over here. The 3000 is the trade which we entered somewhere over here. So this is 1500 quantity. Here put leg has triggered the stop loss, and call leg I haven't done any adjustment. So I will just tell the open position now. So I have around 15,800 calls trading at around 50 rupees, 4,500 quantity, and I have 15,350 puts. This is my first counter trade. So remember this. This is my first counter trade trading at around 50 rupees, 3,000 quantity. So this is my current position, and what I end up doing is I exit all these calls and I shift to 15,700 calls trading at around 68 rupees. So I hope you are clear with the adjustment. Why did I do that? So it is very important to know why did I do that. So now what is my current position? I have 4,500 quantity at 68, that is 15,700 calls. So I hope you are clear what exactly happened. How did I come at this 4,500? 3,000 quantity of the initial trade plus 1,500 quantity of the next trade. And then I have 3,000 quantity put short at 50 rupees, which is trading at 50 rupees, that is 15,350 puts. So now the adjustments are pretty simple. From here the market just started to bounce back. So then what do I obviously do? And all of you know, if you haven't watched the adjustment video, please do watch it. The link is in the description below. So what do you do when the stop loss is not triggered but there is imbalance in position? When the market started going up, this call leg didn't gain. So why didn't this call leg gain? It is really important for us to understand. When the market started going up, we started to recover because the call leg didn't gain, only the put leg lost. Why? Because the IV started to cool down. When the market fell, IV had gone up quite a lot. That's the reason your 20 rupee option became 50 rupees, whereas your 60 rupee option just fell to 50 rupees. But when the market started to shoot up, the IV started to cool down, and hence this option fell from 50 to 40, whereas this option just stayed at 68 itself. It didn't gain a single rupee also, because obviously when there is increase in IV and when the IV cools off, it should lose premium. That is what exactly happened. So next what happened, obviously you all know what is the next adjustment we will be doing. We will be shifting. So what do we shift from? 350 PE to 400 PE. And then the market consolidated and went up. What do we shift to? 450 PE. Right? And again the market consolidated and went up. What do we shift to? 500 PE. So then we just started shifting, and obviously we add one more trade at 1 o'clock, we add one more trade at 2 o'clock. But what we are trying to learn here is the adjustment. And then as the market started shooting up, we shift to 550, 600 and 650. So this is the total amount of shifts we do over time. So from 350 we come to 400, 450, 500, 550, 600, 650 puts. What will happen because of that? Our M2M from negative 1.5 lakh, so it was also around 1.8 lakh in a point, goes all the way to 70,000 positive. So 75,000 positive. So this is how we recovered entire almost 1.5 lakh loss with small adjustments. And we have also put out the adjustment video. If you haven't watched it, please do watch it. So only shift and counter was enough to recover this entire loss of 1.5 lakh in spite of such a big V-shaped move. And when we backtested the result, guess what we found? If no adjustments were done, if there was no adjustment today, the loss would be somewhere close to 3.7 lakh. So because of the adjustments, we were actually able to recover from 1.5 lakh to 75,000 positive. So now we'll be quickly moving on to the video and see what exactly happened. So this is today's video. You can see we start off with 800. So BankNifty trades also we took, but BankNifty is very less. So you can see the quantity, it's pretty less. So we start off with 3000 quantity in 800 and 650 as I told you. And as the market starts to come down, so this triggers the stop loss and we go to a loss of 50,000. So at this point, you can see that our P is trading at 24. This is the counter trade what we have taken because the stop loss has been triggered for 15,650. The stop loss is triggered and we have taken a counter trade at 13,350. And we entered at 22 and this is still trading at 60. But when we approach 10 o'clock and the market falls, you see what ends up happening. So as we approach 10 o'clock, keep an eye on our losses. It's 55,000 now. And as we approach 10 o'clock, you can see that the market is currently trading at 605. It has come down almost 60 points. So you can see that this premium, which was at 22, has gone up to 38. And this premium at 59 has just come down to 54. This call option has just come down to 53, whereas this has increased to 47. So this is again due to IV, and you can see our loss. It's already at 1,28,000. And next what happens? So you can see here, next I end up taking the second entry, that is 15,400 puts and 15,800 calls. So we had already discussed about that, and my loss is still at 1 lakh. So we had already discussed about this entry. Next, this again hits the stop loss, and then we don't add any quantity. Rather, we end up shifting this 15,800 calls to 15,700 calls. So we had already discussed about that in the chart. So we'll quickly move ahead in the video and see that. And we come to around 11:55, and our loss is still at 1 lakh. And you see that I have shifted everything to 15,700, and we have 15,350 intact. So this is what we discussed. So you can see that now, in case if the market continues to fall, then this is actually going to give me some profits or recovery. Whereas if the market goes up, there is absolutely no harm. So next, what did we discuss? We start adjusting when this leg becomes 40, whereas this leg doesn't gain at all. So we will see that how exactly that happens. So here you see 15,350 puts has come down to 40. So we exit everything. And we shift to 15,400 puts. And I forgot to mention one more thing in charts. So we balance the position now. So we have 15,700 calls at 71, 4,500 quantity, and we have 15,400 puts at 54, 4,500 quantity. And what I did again was I also bought this hedge legs and kept a stop loss for these two. In case if the market movement is wild, then these hedge legs will actually end up giving profits. So that's the reason I ended up purchasing these hedge legs also. So now we will see what happens. As the market starts shooting up, you can see where the market is. I also had 1 o'clock and 2 o'clock trade, as I mentioned. As the market starts to shoot up, we slowly start shifting. You can see at this point, I am slowly shifting towards 15,450 from 15,400. So here is where some positions get added. So you can see that it gets little confusing here. It's just that 1 o'clock position has been added. So there's nothing much to it. But what you can see is this is still intact at 700, 450 as well as 400. Only thing is we have just added some position at 1 o'clock. So now as we further move ahead in the trade, you see the position now starts to get simplified. Now we exit everything and we come to 6,000 quantity in 15,600 and 6,000 quantity in 15,700. So you can see that we have shifted all the way from 350 to 600 puts. And you can see our loss, it has completely recovered and it's only 10,000. And I will just move towards the end. So you can see that we approach 315 and you can see the positions right here. We have 10,500 quantity at 15,650 puts and 15,700 calls, which means we have shifted all the way from 15,350 puts to 15,650 puts. And M2M has increased now to 50,000, but it starts to gradually drop from here. So from all the way from 1.5 lakh, we have come to negative 50,000 and it slowly starts to increase from here. So you can see that we enter positive now. At 322, we end up booking somewhere around 76,000 profit. So we squared off our position around this level at 76,000, but we asked the broker to square off the position. Hence, this won't be squared off or this won't become 0. So since this won't become 0, I want to show you a fun thing. So if we had held the position till 329, so I have my broker terminal open So you can see what would be the current position. We would be at a profit of 2,54,000, but we ended up squaring it at 322. So this is a fun thing when when the broker squares off in this terminal, the positions does not become zero. So you will get to see what exactly would have happened if you didn't have the position. So you can also see here we have around 170 executed orders because we had some lot of shifting to be done. But end of the day, it was worth it because we ended 3.75 lakh negative day into a 70,000 positive day. You can see that people tell short straddles don't work in a choppy market or a V-shaped market, but with simple adjustments, you can definitely make it work. So even today you saw that happening. It won't happen every time, but most of the days you will end up saving it. So I hope you guys have liked the video. So that is the end of today's video, and we'll be catching up soon. And I'll also try to go live and show live trading next week Monday or next week Friday. Either one of the days I will come live and we will do live trading. So hope you guys have liked the video and you have got something to learn from it. And see you soon and catch you in the next video. Thank you so much, guys.